The forex market never sleeps, and neither do I. So let's go and see what the charts have to show us. Now, if you're new to the channel, my name is Nick, and I'm a top author on TradingView with over 260k reputation points. And every day I share a lot of free education and analysis on this channel. So make sure that you subscribe, and I will see you on the charts. In today's video, I want to speak about gold. As usual, I will be providing a complete multi-time frame top-down analysis. First, I will be covering the technical aspect of this market. We will then check what we have from a COT perspective, so commitment of traders, which is what hedge funds and the non-commercials in the market are doing. And by the end of the video, by using the combination of these different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on this commodity. We also started now the Black Friday month. The link is in the description. Obviously, for the mentorship program, there is a massive discount, and you also have the possibility to get a full refund of the mentorship program cost directly in your trading account, since we have partnered with the forex broker Blueberry Market. So it's never been this easy to join the mentorship program. I really suggest that you go and check it out. The link is in the description. Now, starting here from the monthly time frame, what do we have? Now here on the monthly, we can see how the market has just started a very strong impulse to the upside. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. Now, if we do that, what we can see here is that the market has just retraced exactly to the 0.618 golden ratio of the Fibonacci taken on this monthly impulse, which is a very strong level of support here, against support here, which the market is currently rejecting to the upside in a quite aggressive way. Now, obviously, in the long term, we can expect more continuation for gold, since obviously it should be an inflation hedge, and since we are expecting inflation, we're actually already getting it, gold should appreciate. So in the long term, both from a technical and fundamental perspective, we can expect more continuation to the upside when it comes to the monthly time frame. Going down on the weekly time frame, what do we see? Now here on the weekly, we can see quite clear structure and price action. In fact, we can see how the market is currently rejecting a quite strong historical structure level for this market. This zone was acting as resistance here. The market then broke it to the upside. At that point, this previous resistance was turned support here, against support here, against support here, against support here. The market tested its zone and rejected it to the upside quite aggressively. And here in the monthly, everything seems extremely bullish. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestions for new videos. Dropping down on the daily time frame, what do we see? Now here in the daily time frame, what we can see is that the market has just created this overextended W formation. Now, in general, after the creation of an overextended W formation, you want to see the market provide a correction at least to the 0.32 of the Fibonacci taken on the daily impulse, and then you expect the market to provide the potential continuation to the upside, since, as we have already seen from the monthly, in the long term, gold seems quite bullish. Now, if we take our Fibonacci on this impulse, so from this low to this high, we can see that at the moment that 0.32 Fibonacci is lining up at this area. And if we extend this area to the left, we can see how this zone is exactly this previous area of supply and resistance, which now that the market has broken it to the upside is turned support and demand here. So if the market will correct to this area, inside of here we have very strong demand and support that we can expect the market to then reject to the upside. I also spoke about gold a few times in the past. I spoke about gold when the market was around this area. I made a full breakdown explaining all the reasons for which we expected this rejection to the upside. Then we got the move, also the correction. From here I made another breakdown explaining all the reasons for which we wanted to see another impulse to the upside. Then we got this complex correction. I spoke about gold a couple of times inside of here, explaining why if we would have gotten bullish structure from a daily perspective, we could be expecting a continuation. And again, that is what the market gave us. And at this point, I made another breakdown explaining the very similar situation that we're currently getting here. Simply now we already got the continuation to the upside. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. Now, if we go and see what we have from a COT perspective, which is basically what hedge funds and in general the biggest speculators in the market, so the non-commercials, are doing, what we can see here is that lately net positions are getting increased. We went from having 168.3k net positions up to having 215.1k net positions. So we're getting a massive amount of longs getting added here from an institutional perspective on gold, with currently 311k long positions and only 95.9k shorts. So gold is getting quite bullish. Now, if we will have a correction to the 0.32 of the Fibonacci taken on this daily impulse, this is a very good zone inside of which we could be looking for the potential continuation to the upside. And how we will be doing that? Now, as usual with students, we will be reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, after the break, on the retest of this previous resistance turn support, inside of here we will be monitoring price action from an intraday perspective, waiting for the market to shift from an intraday bearish market as we will have to an intraday bullish market, and only if the market will shift from an intraday bearish to an intraday bullish market, only at that point we will be adding gold to our watch list. And as soon as the market will provide to us one of our valid entries, we will be looking for a potential long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to potentially complete this impulse correction and impulse pattern to the upside, and for the market to provide and create a potential higher high. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then every single day you get a new daily market breakdown showing you how to apply the strategies in live market. And you also get your questions answered every day in the daily Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description and I will see you in it.